Bitcoin looks calm, and that may be exactly where the emotional trap begins. At the production cutoff, Bitcoin was still trading near $64,000 even after a new round of US strikes against Iran. But that stability does not prove the market has absorbed the risk. It only tells us that Bitcoin had not repriced dramatically while several major cross-asset markets were still closed. The verified catalyst is serious, but the market outcome remains unknown. US officials said the strikes followed an Iranian attack that left a container ship badly damaged in the Strait of Hormuz, while Iran said the waterway would remain closed under its stated conditions. Before the conflict, that corridor handled roughly 1/5 of global oil and liquefied natural gas flows. That creates a potential energy and inflation channel, but it does not automatically create a bearish market outcome. The behavioral danger is confirmation bias. A calm weekend Bitcoin chart can encourage investors to conclude that the event no longer matters, even though oil, Treasury yields, the dollar and US equity futures had not fully processed the newest development at the production cutoff. Bitcoin is useful because it trades continuously, but it is still only one part of the liquidity system. Its price shows what crypto participants are doing. It does not yet prove how the entire macro market will respond. If futures open higher and oil remains contained, Bitcoin's calm will look more credible because several markets will be confirming the same interpretation. If oil and yields rise while equity futures weaken, the weekend calm will look more like delayed or incomplete price discovery. A flat, choppy opening would mean uncertainty is still being priced rather than resolved. The strongest counterargument is that Bitcoin has already absorbed the information, but that argument becomes convincing only when the other markets independently agree. The confirmation test is therefore cross-asset, not emotional. Watch whether Bitcoin remains stable after energy and equity futures reopen, whether crude prices stay contained, and whether yields and the dollar avoid a renewed inflation signal. The thesis weakens if all of those markets reopen calmly and remain orderly, because the weekend stability would then have broader support. Until that evidence exists, price is the surface, and the message is whether liquidity across the system confirms the calm.